Welcome back, Alpha Hunters. Hope everybody had a great week. The markets are closed for June the 16th. But for all you bulls out there, I'm going to do you a favor. I am not going to change my thumbnail. I'm going to leave it as is because you know what? If I change it, then the market start going down, and we don't want that. We want you to make some money. But we got a lot to cover this week, so let's get right into it. So last week, we know we had a strong move higher. We got through 420 solidly. We kind of made a run up towards 430, and that's kind of where we stopped last week. So Monday, we started around the 430 level, kind of went sideways early Monday, and then it just started slowly running up. But bears weren't really fighting it, just kind of ran higher into the end of the day. A lot of expectations. Hey, you know what? Inflation coming out Tuesday morning, it's not going to be bad. Tuesday morning, inflation wasn't bad. It actually came in line. Inflation rate was expected at 4.1%. It came in at 4%, with the core inflation rate expected to be at 5.3%, and that came in line at 5.3%. So the market had a nice little gap up, traded sideways for basically the whole day. And that's all you need to know about Tuesday. So as we got to Wednesday, the market was expecting the Fed to basically hold, not really raise rates or anything. So we had a little bit of an early push, and then we sold down as we came into the Federal Reserve rate announcement. And the announcement was a hold, so it didn't change. It stayed at around 5.25%. Market kind of dropped a little bit initially, and then once the Jerome Powell kind of came out and talked and sweet talked the market a little bit, and kind of ran bullish. Not really too much happened though, just a quick drop, and then it kind of got bought back up and kind of ended about where it started from the Fed announcement. Thursday, we got retail sales, and they actually came in a little bit better than forecast. Forecast was expecting a negative 0.1%. It came in at 0.3% positive. So not really too much of an early market move. Basically gapped down very slightly. Basically ran bullish for nearly the whole day up until about the last hour. And then we started seeing some selling volume come in. Now Friday's a little bit different. We do have, you see the D icon down below. We did have a dividend on Friday. So if you actually look at the SPX, the Qs, basically all the other major indices, they actually did have the gap up. So the SPY would have had the gap up, but since they paid the dividend, they didn't get a higher trading price on the day. So we had a little bit of a gap up, and then we just kind of traded down throughout the day. A little bit of a midday little bump there, but we did in towards the session lows on Friday. Taking a look here at sector rotation for the week, we had materials ending out in the top spot, and they were basically the high flyer for most of the week. Between them and tech, they were basically kind of going back and forth, but tech kind of gave it up in that last little bit as we went into close. Tech was looking good Thursday, midday, but yep, kind of just gave it back. Then you got industrials and discretionaries also outperforming on the week, as well as staples barely squeaking out some outperformance. XLC, the communications area, real estate, healthcare, and utilities all underperforming, with the major underperformers for the week. Financials and energies got hit pretty good. We saw a slight reduction on the Federal Reserve balance sheet week over week, down roughly 0.75%. And that's about it. We'll see if it keeps dropping. The VIX actually started out this week kind of strong, as there was some major catalysts this week with inflation and the Fed. But as we got further into the week, it just kept dropping, especially on Friday. Now, this is kind of what you want to see if you're trying to be bearish. You want to see the VIX kind of go lower as the market starts to sell off. And then if the market then breaks down even more later, that's when you want to see the VIX then come back up and start to move higher. But you want to see the market top before the VIX bottoms. So potentially could be doing that. Take a look here at the DXY, the dollar index. Was definitely kind of curious to see how this week was going to play out. We definitely got the bearish move after really the Fed. Really, once the Fed was done, we got the bearish move on the dollar. So we're kind of getting back down into some previous stronger support areas. So we'll just need to see if it's going to come down and bounce off support and go higher, or if it's going to get through this 101 support level this time. And if it does, we might just see the dollar to continue to fall. But the 10-year yield was looking okay this week. It wasn't super bearish, but it wasn't super bullish. We do have 3 upper wicks into a previous resistance area from a couple weeks back. So I'm not really sure how this is going to go. You can definitely watch these tops over the past couple of weeks, or I would say the low that I actually put in this week, June 13th. If it gets below that, I think it's probably just going to be moving lower. Take a look here at the 10 and 2-year yield curve inversion. We definitely have finally filled this gap that we put in back in March. Those are very rare for rates because rates trade all the time. So we will see what happens. Are we going to make a run down to the low that we put in back in March, or are we just going to fill that gap? And now that we filled the gap, maybe we start push back to the bullish direction on this inversion yield. Time will tell. Take a look here at the GLD gold ETF. Not too much kind of went on this week with the gold. It didn't really set up to break out or break down, just some full-bodied candles coming in here, or daily movement. So be curious to see what really kind of how this continues to react going forward. You obviously have a very strong support level right here over 180. If it gets through 180, this thing's definitely just going to be falling. Now, what's very interesting to note here is we are having declining kind of price action on the highs. So I would be watching that definitely on that 180 level. The HYG, the high yield corporate bonds, nice little uptrend continuation this week, but nice sell down there on Friday. So not really breaking out totally. We'll see if we get another day of moving higher. Maybe we'll continue to push higher. It's really needs to take out this hump from back in April. If we can get back above these highs, I wouldn't even really worry too much about the highs from back in January, February. I think once it gets above this mound that it put in back in April, I think that is these are the highs that really to watch for me on the HYG. And the LQD, the investment grade corporate bonds, nice little push higher, nice little gap up there on Thursday. So it could be setting up a nice little double bottom type action here over the past few weeks. Be curious to see. These bonds aren't really moving a whole lot. I thought we'd get more direction, confirmation, or solidified coming out of this week, and we're not quite getting that. So it's just going to take some time to kind of see how it continues to move. All right, so take a look here at the week over week options change. Now, what is very interesting to see, so we did just lose the June monthlies. That was the biggest one that we currently had out there. The next biggest one is going to be this July 21st. But what you noticed this week, and what we saw a lot this week, I was surprised when I was entering these numbers, how many puts were coming through in a lot of these weeklies going forward. There was a lot. September, August, those are monthlies. But for the next several weeks, we just saw a lot of weekly options buying of the puts. Now here for the next 2 weeks, we actually saw a lot of call selling. So is the top kind of in on the near term on the market? Well, I got another little headline here coming up for you, but yeah, we see some market participants saying, yeah, this might be a little bit ahead of itself. So might be time to reel in those profits. So we're going to take a look here at the next 2 weeks of option structure, because this is one thing that was very interesting while I was putting in these numbers, was June 23rd. So this next Friday, we are going to have a massive put wall here at 430. Like, these guys came in and bought a bunch of 430 puts. You don't know if this is directional play. I don't think it would be a directional play. I think this is probably more of a hedge than anything, but they put in a pretty strong wall there. And then if we look out to the 30th, you can see there is another very strong 430 put wall. So for the next 2 weeks, I don't know if we're going to really just drop off here, but we might start to set up some subtle pullbacks here over the next 2 weeks, because put buyers here for the next 2 weeks did come out and basically said, hey, you know what? We don't want to see any pullbacks, but if we do get pullbacks, we're going to buy some protection. And they did heavily at the 430s. And then looking at July 21st, the monthlies for July, huge put wall there at 420. So we do have quite a bit of put walls that are just right under where the market currently is. So it'd be curious to see what the market's going to do. So the sentiment survey on Thursday again increased ever so slightly, nothing like last week, but we did see it tick up ever so slightly. So it's still up at 45%, which is now the new past 1 year high. Going to be kind of curious if we do start to pull back next week, will bullishness still continue to increase? I'm going to be watching that, and I'll let y'all know. Take a look here at the Fed Watch tool for July. There's now a 75% chance of a rate hike for July. September, there's now a 70% chance at a hold at the higher level. November, there is also a chance of a hold of 65% at the higher level. December is where it gets a little bit iffy, but currently it's looking like a 50% chance hold. And if you remember from about a month or two ago, there was starting to be rate cuts in the second half of this year, and now the market actually finally pricing in higher level of rates. What's interesting though, with higher levels of rates, usually that devalues equities, but we haven't seen that over the past couple of weeks. We've actually seen equities go up. So this is an article from Bloomberg. JP Morgan says stocks to suffer $150 billion rebalancing. Now, basically what the article is talking about, I'm going to leave this down in the comments because it's a very interesting point, is equities and bonds have not rallied together, and equities have led for much of the past couple of weeks. But what hasn't rallied is the bond side. So now you're getting a lot of these fund managers that are going to have to rebalance their portfolios because their portfolios and what they have advertised to their clients is we are going to stay within this kind of an allocation on our weighting between equities and bonds. And when is this most likely going to be finished? Well, by the end of the quarter. And when is the end of the quarter? Here in the next 2 weeks. We only have 2 weeks. So for the next 2 weeks, we might see stocks pull back here a little bit as these major funds rebalance their portfolios. So we might see an uptick in bonds while we see a pullback in equities. Looking here at the RSP, the equal weighted SP 500 had a very strong week. Did not get above the highs that it had back in December. So I would be a little bit not trying to be bullish right here. I would be a little bit kind of taking it off the table if you've been on all of this run. The DIA, the Dow Jones ETF, definitely a nice push up on Thursday. Now Wednesday it had a bad day. Health insurance companies had a really bad day that day, and that was one reason why the DIA and the Dow Jones kind of had a kind of lackluster middle part of the week. But Thursday came out and got bought up very strong with a nice break above past several months, making a new yearly high, and even taking out that yearly high on Friday, but then selling back down and getting back below some of these previous highs. So people are going to look at this move on Thursday and Friday and say that's a false breakout. But if it pulls back and then just comes back and gets back above the highs that it just put in this week, the DIA is going to be looking pretty good. The IWM, so 2 weeks ago, definitely talked about this move higher towards the end of that week. Expected it to move higher last week. It did move higher last week, but it came right up into these highs from back in November, December. And that was the area I was saying it's going to be really tough for it to kind of get through. That's where probably just want to take it off the table if you were getting in on that run. Very nice move. It doesn't exactly look the most bullish, especially when you compare it to the Qs and the SPY. The Qs came out this week and just gave 0 Fs and just kept running. Not much else to say, just kept going. So you can't call tops like this. You just got to say, you know what, at this level, I don't want to be bullish. And at certain levels, you don't want to be bearish. But it did just come into the March high of last year. So definitely looking like it's going to find some resistance here. I would expect it to find some resistance. Actually did gap over that March high of 2022. So it's not exactly the best area to be looking to be bullish on Qs and probably even big tech. I would wait for a pullback. Just wait, let it come in. The other thing you kind of notice on the Qs though is Wednesday and Thursday, nice volume day. Friday was a much higher volume day, and there was no catalyst on Friday. We just got to a certain price level, and since we're seeing that much volume kind of come in on the sell side, you know what? Maybe that was the price level that the market wanted to get to. It got to it. It found some liquidity, and maybe it is done running for now. Looking at the SPY, same kind of thing on the volume. Very nice uptick in volume throughout the week, Tuesday, Wednesday, and Thursday, but Friday's volume came in, was the highest volume day of the week. Didn't quite put in a new high over Thursday, but that's mostly due to the dividends. But most of everybody is fully expecting the market to pull back. So let the market pull back, and if you want to try and get in bullish, get in bullish. I'm just going to wait because I want to see how the next 2 weeks kind of shape up, and then maybe July. Because if we get past the next 2 weeks, as a lot of these major funds are rebalancing, then we can see what kind of price levels we pull down into. And if we wind up getting back below 430 by next Friday, that would be interesting. Or maybe by the end of June. I just kind of want to see what kind of pullback we do get, okay? That's about the main thing. Just a reminder, Monday is a holiday, so no trading on Monday. Enjoy the weekend, long weekend. Alrighty, take care, Outfunders.